The 200 EMA, EMA being an abbreviation for exponential moving average. I use this powerful indicator for clarification on the market direction, potentially even building a bias. However, obviously the market can go any direction at any given time, so having a bias isn't the safest play. But if you just look how the 200, right? If you just look how the 200 has been acting in the past, it is fairly consistent. So when I say I have a bias, if I ever see the 200 is below price action on the daily time frame, then my bias is taking buy positions. Unless we're at some major levels, major resistance levels, then of course I could be looking at sells. However, my bias is buys for the long term. Every time we're above the 200, the market tends to move up. But you see, if it breaks below, it tends to move down. So I'll use the 200 for, understanding the market direction and understanding the overall market direction. I use the 200 for a confluence for entries and even to target zones. So there's a quick video touching on those three. Let's get right into it. Starting with confluence for entries. Looking back in time, over here at the 200 moving exponential moving average, we actually have a confirmation candlestick here, which is a bullish engulfing. Okay, one of the most popular confirmation candlesticks. Seeing this type of signal at the 200, on top of that, we're looking at it on the daily time frame, off of the daily time frame, where each candlestick represents one day. This is a pretty strong signal that the market has intentions to continue going up. As you can see, we have printed a bullish engulfing, and what's happened straight after that? A lot of bullish momentum going to the upside. Even if you go down to the 1 hour time frame, you'll be able to see a similar sort of play. Again, we have a trend continuation pattern here, a bullish candle, bearish rejection at the 200, and then a continuation up. As you can see, price had come down, filled in this demand level, and at the same time another confluence is that there's a 200 just here. It's touched this 200, respected it, closed back up there. So when I say the power of the 200 is a truly powerful indicator, because you can literally just take setups based off of this indicator. So my thing is, the higher the time frame that you're using the 200 EMA, the stronger the confirmation. The lower you go into the time frame, of course the confirmation tends to still be valid. However, you will see a lot more break up and down, whereas the higher time frame, you'll find it is a lot more consistent with where the 200 stays. Anytime we're above, the market pushes up. Anytime we're below, the market pushes down. And all you have to do is just look for setups that are going to the direction that the EMA is showing the market is pushing. Moving on to target zones. You can see this play. We've come to the 200. So now when I say target zones, some people like to take profits at the 200. You can see, for an example here, you have an accumulation of orders Then you have a bearish engulfing, which could also be seen as a confirmation candlestick. Looking to the left might not be as clear as to where you would like to take the market, take your profits. So you can just simply target the 200 because the market tends to bounce once it touches the 200. I would count this as a bounce. It's touched the 200, rejected before completely breaking it. On the right over here, you have a confirmation candlestick. This is the demand level. So in other words, you've got a lot of buyers at this point in the market. You've marked that out on the higher time frame. You go down to the 1 hour. You go down to the 1 hour. Now the name of the game is patience. So you're waiting for the market to come to your level and to see if you have any confirmation. You've got bullish engulfing at your key level. Again, in a case like this, you've got this zone to fill, and then of course you've got resistance all up here, and at the same time you do have 200, and this could be a target for the market to hit before projecting. As you can see, we have a few rejections. There's one rejection here, another rejection there. Overall, you can see the volume. It's a lot of volume. As we're approaching the 200, the volume tends to slow down. You're getting smaller and smaller candles before you start seeing an increase in the bearish momentum, and then the complete rejection. Once you understand the overall higher time frame direction, this is where you use the 15 or even the 5 minute to find better entries. That is the power of the 200. Test it out, look at past data, and you'll see its consistency when it comes to price action getting close to the 200 or even touching the 200 and then giving you a confirmation signal. Confirmation signal. Confirmation signal. Confirmation signal. You even have a strong W in play here. Great signal. Once you truly understand this, you can actually use this to your advantage and milk as much as you can from the market.
Talking my shit like, bitch, I'm really him. Hold up, look, walking this bitch like, hey, yeah, I'm really him. Talking my shit like, hey, bitch, I'm really him. Don't believe me? Come and see me. Got 3 wishes from my genie. Now I'm on your local TV. Y'all on tour, got bitches screaming. Say she wanna come and see me. When I'm in a local city, I'm like, pause though. Please step aside so they can see me. And I walk up in this bitch like, yeah, I'm really him. Talking my shit like, bitch, I'm really him. On God, walking this bitch like.